All right, a brand new report on U.S. private sector jobs just dropped. And folks, the main number is a real head-turner. We're talking about a figure that might be signaling a pretty big shift in the economy. So let's dig in and break down what's really going on.
Okay, check this out. The latest ADP report for November 2025 says the private sector didn't just slow down, it actually went in reverse. It lost 31,000 jobs. Now I know, on the surface, that sounds pretty dang alarming.
And that leads to the million-dollar question, right? Is the U.S. job market, which has been this unstoppable force for so long, finally in some real trouble? Let's get into the story behind that one single number. To really get what's happening, you can't just fixate on 1 month's number. The key, as always, is to look at the trend. And what we're seeing isn't some sudden dramatic cliff. It's more of a slowdown that's been building for a while now. And here is the piece of context that really matters. A single month can be a fluke, right? An outlier. But the 3-month average has now officially dipped into negative territory for the first time since all the chaos of 2020. That is a major signal that the market is genuinely cooling off.
And wow, just look at the difference a single year can make. By this point in 2024, the economy had piled on almost 1.5 million private sector jobs. Fast forward to this year, we're at just over 500,000. The engine is definitely still running, but it's clearly running at a much, much slower speed.
So let's be super clear here. This is not a collapse, but the pace, the speed of hiring has slowed down. And I mean dramatically over the past year. That's the real story that's hiding behind that big, flashy headline number.
Okay, now let's peel back the layers, because that overall trend, it hides this really fascinating story of winners and losers across different parts of the economy. Some industries are still hiring like crazy, while others are hitting the brakes.
It is absolutely a tale of two job markets right now. I mean, on one side, you've got sectors like leisure and hospitality. They're still adding jobs at a really healthy clip, probably because we're all still spending on experiences. But on the other side, you've got industries like information and manufacturing, and they're actually cutting jobs. It's a sign of that tech recalibration we've been seeing, plus a shift in what people are buying.
The biggest winner, and it's not even close, is leisure and hospitality. We're talking restaurants, hotels, entertainment, all that fun stuff. In just the past year, that sector alone has added over 300,000 jobs. It's really been the powerhouse of job growth.
Now, let's flip the coin. The biggest loser? That would be the information sector. Think tech companies, media, telecom. It's actually down 25,000 jobs over the last year. That is a massive reversal from that hiring frenzy we saw just a couple of years ago. And the picture just gets more complicated from there. You've got natural resources and mining adding over 50,000 jobs this year, and construction is looking pretty strong too. But then you have a sector like manufacturing. It's actually up for the year overall, but it lost 18,000 jobs in November alone. That kind of tells you that there's some very recent weakness creeping in.
Okay, job numbers are one thing, but what does all of this actually mean for something that, let's be honest, we all care about a lot, our paychecks? Let's connect the dots between this cooling job market and wage growth.
This is really the question that hits home for all of us, isn't it? With hiring slowing down, are wages still growing fast enough to actually make a difference in your day-to-day life?
While the data shows a pretty clear divide. If you stayed put in your job this past year, your median pay went up by about 4.4%. Not bad. But, and this is a big but, if you switched jobs, you likely saw a much bigger bump, around 6.3%. So there is still a pretty significant reward for making a move in this market.
But here's the psychological catch, and Wolf Richter from the source material just nails this feeling. He talks about that frustration of getting a big raise. You feel great for a moment, and then reality hits you. You realize that for the last couple of years, those wage gains weren't really getting you ahead. They were just helping you play catch-up with all the crazy price hikes. It's like you're running on a treadmill. You're putting in all this effort, but you're not actually moving forward an inch. It's just frustrating.
All right, so after seeing all that, let's zoom out and pull this all together. What is the big picture here? What's the main takeaway from this cooling job market?
Look, if you're gonna remember 3 things, let it be these. First, that negative headline number, that's a real signal that the market is shifting. Second, the real story here is a slow, year-long slowdown, not a sudden crash. And third, the impact is totally uneven. Your experience really depends on what industry you're in.
So, at the end of the day, here's the bottom line.
the data is pointing to a market that is definitely significantly cooling off. But, and this is super important, it is not collapsing. We're seeing a deceleration, not a nosedive.
And all of this leaves us with the big, forward-looking question, doesn't it? Is this slowdown that gentle, soft landing that everyone was hoping for? Or is this the first chilly breeze of a much colder economic winter ahead? I guess only time will tell.